The one report that we've been waiting for, because Spencer's going to bring us good information, good information, welcome information on our investments. Presentation by Spencer Morrison on our investment report, quarter ended March 31st of 2016. He's our elected city treasurer.
Little known, elected city treasurer.
Yeah.
Right. Well, thank you. Good evening, Mr. Mayor, members of the council. I wish I could say I had really exciting news, but really it's just better than average, which is what the market's been doing for many quarters now. We do have a market value of the city's portfolio of about 110 million. 93.7 million of that is city held. That is a $1.7 million decrease from the last quarter. Some key cash items was the first installment of the property tax and district levies for 13.6 million. And payroll was about 7.8 million over the quarter. And the flood control agency activity capital fund received about 10.1 million in state advances and spent about 8 million on projects. 11 investments matured or were sold, and 10 were purchased, with an average yield sold of 0.788% and average yield purchased of 1.086. So that just speaks to a little bit of how the market is growing still for the bond market and for fixed income investing. The city held portion of the portfolio, the composition is on the pie chart on the screen. Agency bonds such as Fannie Mae, Freddie Mac, etc., were about 20% of the portfolio. U.S. Treasury bonds around 11%. Muni and state bonds about 6%. Corporate bonds 14%. CDs made up 6%. And so just a little bit over 50% of the portfolio is in bonds. The local agency investment fund, or LAIF, made up about 30% of our portfolio. And cash and money markets and other cash-like investments made up about 14% of the portfolio. The consumer price index was about 0.9 to end this quarter, which was better than it was last quarter. It was flat. It was 0. It's on a gradual path to meet the Fed's 2% goal. The Federal Open Market Committee continues to remain cautious about the global economies, holding rates to around 0.25 to 0.5% as of its March meeting. The bond markets reacted strongly to this news, and yields on most maturities ended the month down a few basis points. Experts at PFM Asset Management are anticipating 2 rate hikes at most in 2016, with even those being contingent on both reasonable market stability and the receipt of favorable economic data. The chart that you see, probably pretty small. You're standing much farther away from it than I am. Always looks bigger on the computer screen. It's just an interest rate outlook published by the Governmental Finance Officers Association at the end of April in its issue of Treasury Management. This chart just shows some of the slow growth that we're to expect in the quarters to come. It points out May 2016, July 2016, and October 2016 interest rates. For example, on a 5-year note, they're forecasting 1.36% in May, July 1.55%, and October 1.74%, which is pretty on par with where we might see our portfolio yields, at least in our purchases. With that, I will entertain any questions from the panel, from the council.
Any questions of Spencer? Thank you for the quick, down and dirty presentation on our investments. And it's good to know that the market has turned at some point, and we can be somewhat optimistic in the future that it will continue some type of a trend upward, though there will be bumps along the way, I'm sure. Thank you very much. If you're going to continue to hold that elected position, you're going to want that market to rise just a little bit more.